Hi, this is Jim Cunningham. Welcome to High Net Worth. Consider a family office for your financial, tax, and estate planning needs. And disclaimer, before we get started, this is super important. We're going to do a lot of talking here, right? This is not legal advice. Please do not watch this and then go out and do a bunch of stuff saying, well, Jim and Kat said we could do this. This is absolutely not what's going on here, not legal advice. If you're watching this on YouTube, subscribe to our YouTube page. It's really easy. Click that button. This will appear in your feed. There's a lot happening in the world, obviously, right now, and a lot of tax change that's on the horizon. So it's very important to stay abreast. We do these weekly. Please subscribe to our YouTube page. And I'm Jim Cunningham. I'm the managing partner at Cunningham Legal. I have over 25 years experience, which I look in the mirror and I say, how did that happen? We have offices throughout California, and I'm a certified specialist in estate planning, trust, and probate law. I'm also a real estate broker and securities and insurance licensed. I have with us here today Kathiana Jean-Baptiste, who is a graduate of the George Washington University in DC, as well as an LLM in taxation. So not only, Kat, did you go to law school,
right,
but you yet went to another law school after that law school and got an advanced degree in taxation and a poli-sci and econ major and a minor in business administration. So Kat and I can talk about politics and economics all day. And part of the Corporate and Business Law Society, Black Law Students Association. And what's really, really cool, other than being an intern at the White House, right? You're named top 40 under 40 national Black lawyers two years running. So we actually have kind of a star here.
Oh, thanks, Jim.
No,
and on top of that, I worked in DC for a couple years at a big law firm, working primarily with private wealth estate planning and specifically family offices with over 20 plus families, kind of going through that process with them.
Yeah, I mean, really, and frankly, a range of wealth, right? A lot of zeros in some of those in some of those portfolios. So I will say, how can we help you as a law firm? Most people want to pay the least taxes possible while securing a legacy for themselves, their family, and their loved ones. Our job here as legal counsel is to help you craft a plan, give you options, and make recommendations that are part of an integrated plan to reduce your overall tax bill, leading to greater wealth for yourself, your family, and your loved ones. For some people, that is a single instance, okay? For some people, they come in, they say, well, Jim, I've got, this is my situation. We say, okay, sign these documents, great. For other people, it's a longer multi-year, frankly, a multi-generation engagement. So we're going to talk about that second variant here. We have offices throughout California, Bay Area, Capital Region, and Southern California. We also meet many of our clients by Zoom, especially in the areas where the traffic is bad. Quite frankly, people say, you know what, I'd rather not drive and then park and have to deal with all that. So can we just get as much done possible by Zoom? But we do have offices in kind of the big urban areas in California. So what is a family office? Kat, when you and I talk about a family office, we kind of know what it is because we kind of live in that space every day. But I would say that a family office is it's a bundle of services that provides tax and wealth advisory for what we would consider ultra high net worth individuals. Now, traditionally, that's about 30 million up in wealth. Also for high net worth individuals, and I would say a caveat, if you're a business owner and you're looking at selling your business in a year or 2 or 3 or 4 or 5 years, it might make sense, even if you're not yet at 30 million, it might make sense to engage our services because there's a lot that you can do along the way to mitigate that, 30, 40, 50% tax bill when you sell your business. But I would say traditionally, it's kind of that 10 to 30 million and up. And really, this is a total outsource solution to managing all the stuff that you have to do, right? We're talking tax, compliance, financial investment side. There's a whole, as you know, if you're a high net worth individual, there's a lot of stuff that you have to do. And this is tax planning and mitigation. Everyone loves the tax mitigation, budgeting, charitable planning, insurance, wealth transfer advisory services. A lot of our clients, Kat, they say, I want to help out my kids. How do I do it? How can I do it? Any thoughts on this, Kat, on what a family office is and how it can benefit clients?
Right. So you basically summed it up. Basically, the family office is bringing all the work that you have to do, whether it's with your CPA, your attorney, and your financial advisors under one roof. And so we kind of help coordinate and make sure that year round the work is getting done by all three parties, and so you can still have your life and kind of have everything being done, whether it's the tax planning or getting a new life insurance or creating a new brokerage account. All that's getting done under one roof.
Yeah, and I'll tell you, well, I would say, who's a family office not for? Okay, this is another way of looking at it. What we find is once clients cross there's kind of a threshold you cross at 100 million in personal wealth. Many times they set up their own, what we would call a single family office. So what we're talking about here today is what is termed in our industry a multi-family office. So what that means is our law firm heads up a multi-family office, meaning we will have several, not a whole lot. And I'll tell you, it's a very small number of families that we take on as clients, but it's a smaller number of clients. But really, you're getting the economies of scale, right? So you're not having to hire your own lawyer, your own manager, your own, all of these other roles, quite frankly. Once you get over 1 million, when you see the billionaires, they'll have their own family office. I know there's one very well-known billionaire, a friend of mine works there. And I think their staff's about 30 people, but it's a household name. And frankly, if you have billions and billions of dollars, you do need a staff of 30 people because it's complex, right? So I'm going to go through kind of rapid fire a story. And I'm going to talk about Hal and Wanda Lee. And then Kat's going to kind of walk us through, after I tell you who Hal and Wanda Lee are, Kat's going to walk us through and kind of, and walk us through what a year looks like with them, what a year engagement. So Hal and Wanda are in their 50s. And, Hal and Wanda, like many of our clients, they lead what I would call a normal life, right? They put their pants on one leg at a time. They drive their own car. They buy their own food. But there's some odd, for lack of a better term, there's some odd characteristics to it, right? So Hal and Wanda started with nothing, and they live in a $10 million home in Kentfield. Now, for those of you who don't know what Kentfield is, Gavin Newsom, our California's governor, just sold his home in Kentfield. It's in Marin County. It is a very small community. A $10 million house is a nice house. It is certainly not the most expensive house, but it tends to be what you would, outward appearances would be kind of a normal life. So this is not the life of the ultra rich and, driving around in limousines and drinking caviar and champagne every day for breakfast. These are just normal people. $50 million in liquid investments and annual income of about $10 million. And there are a fair number of people out there who kind of are in this situation. Hal and Wanda have 2 daughters. Wanda is still frugal. And it's something that I think, Kat, I know when we internally talk about this, we kind of look at each other like, this person's still frugal. Like, they have enough. Okay. You don't have to be washing out your Ziploc bags. Really, I think you can afford new Ziploc bags. But Hal has founded 2 companies, and like many of our clients, one makes a lot of money and the other one loses money. But the loser has a lot of potential. Maybe it's a disruptor type company, and it's fun, right? So it's a passion project for Hal. And again, Hal and Wanda, they drive to Trader Joe's in Greenbrae. They shop at Nordstrom. For those of you who know Napa, they love Gott's Roadside. They love to get the burger there. And they're just if you saw them walking down the street, you wouldn't think they're ultra rich people. Okay. These are the type of people, quite frankly, that many times are our clients. Okay. Hal loves the Giants. I mean, I couldn't resist this, right? We're in the middle of the playoffs. Hal loves the Giants, and Wanda is a secret Dodgers fan because you have to be a secret Dodgers fan north of Fresno. And their 2 girls travel in economy, unless they're with Hal and Wanda, and then they travel first class. But Hal travels first class because he feels like he should, right? He's done well, but he's still kind of miffed by the price, right? He's still aware of that. And, Hal might negotiate $5 at a swap meet, maybe go down to the Alameda swap meet. But his portfolio might have gained or lost 50,000 in that, 20 minutes that he's negotiating with a person, but then he might tip $100 to a waiter at lunch, right? So you're getting a little bit of flavor. These are normal people. They may be like you, right? But one of the things is they've kind of lost touch. At least Hal's lost touch a little bit with money, in the sense that, somebody who might be working for an hourly wage has a sense of money. Wanda hasn't. So there's a little bit of a disconnect, but, they obviously don't want for anything. They don't want to spoil their girls. right? That's the last thing they want to do. They want them to stay grounded. And, you know, if Hal loses $1 million on investments, he feels bad. And when he gains $1 million, it feels good. And those are kind of the numbers that are needle moving for Hal. And Hal also realizes that money, you know, I saw years ago, there was the movie Blow. It's about the cocaine trafficking in, I think it was the 70s or the 80s. And one character said, money's not real. And in a sense, you know, money, you have these zeros on a financial statement or a bank statement, but really it's kind of illusory because you can't touch it. You know, you can't go down to the bank. I remember, Kat, when I was about 9 years old, I went down to the bank and I had $300 in the bank or something. I said, I want to see my money. And the teller counted out the money. So, but you know, that's not real, right? Hal still has to deal with difficult people at work. He still picks up his own socks. But Hal and Wanda, where they're at now in their lives, they're in their 50s. And I can tell you, I'm 52. And you start thinking when you're in your 50s, you start thinking about things like, you know what, I really don't want to deal with this or that, right? I don't want to deal with maybe the day-to-day. I'm also starting to think legacy. I'm also starting to think not only the legacy, you know, monetary, but my values and passing those to my children. I don't want my kids to be spoiled. You know, I will tell you though, that if you fly coach, your kids will fly first class. If you fly first class, your kids will fly privately. And they don't live what I would characterize as objectively an extraordinary lifestyle. All right. They don't know how to live like that, but they know something is missing. Okay. And they've got a lot of advisors that they talk to. They might every few years talk to their lawyer. They might, you know, every February or March talk to their CPA, and their financial advisor they might talk to, I don't know, once a year, maybe once a quarter if they have a CPA or a financial advisor who's really on it. But there's a missing component. All right. So they know they need to be doing something. They're not quite sure what the next step is. They have zero interest in reinventing the wheel. Okay. And a lot of people, they go, this is not my wheelhouse. And the Lees then discover that a family office might be a right choice for them. And before you start walking through what an annual engagement looks like, I will tell you there are some mandatory members of a family office. And I have here law, accountancy, financial advisory, and insurance. And I use a very specific term, firm. This is not one person, okay? Because this is typically a multi-year engagement. And here's what happens. If you're in your 50s or your 60s, your advisors, guess what? They start retiring. And so you don't necessarily want these team members to tap out with a significant amount of what we would call institutional knowledge. So by institutional knowledge, meaning they've worked with you for several years. The way our structure in our firm is there's a partner associate structure with paralegals and administrative assistants. And we work together as a team, which enhances institutional knowledge. And I would also say, as needed, spiritual advisor, I put that as optional. I think that's very important. Some of our clients have deep committed faith, and that is very important to them. Others don't. And that's why I kind of put that on as needed. And then the real estate professional, you know, some clients have a home. If you don't have many real estate holdings, you know, I don't know that you really need somebody kind of in your camp on the team. But if you have significant, you know, we have some families who have quite a number of residential, commercial, industrial properties. You need to be paying attention to those. Okay. Somebody needs to be paying attention. And just making sure your insurance premium gets paid and your binder comes back, and there's a whole litany of things that, you know, if you're listening to this, you go, oh my God, yeah, it's such a pain in the neck. I just want to go have fun. So, I will tell you, Kat, you and I know advisors, right. here's the unvarnished truth. They don't talk enough to each other. You know, if your advisors don't have their cell phone numbers, and if they're not texting each other or FaceTiming each other, whatever it is, on that sort of level of professional intimacy, for lack of a better term, I'm not sure they're working close enough. Right. Advisors also have different time horizons. I would say that lawyers are kind of too narrowly focused, and financial advisors are forward thinking, CPAs are backward thinking. And I will say that lawyers probably have the biggest egos out of all of them. Okay. Truth be told. And they often feel threatened by other professionals. Okay. So the lawyers oftentimes fail to see the really big picture. And I think that's, Kat, you know, working with you, right? It's really a joy because we do get to see the big picture. Right. And again, CPAs are backward facing. They're thinking about the past. Financial advisors are thinking about return. They're not necessarily thinking about after-tax returns, which unfortunately many do. But I think it takes all three working closely. I think it takes a real, a heavy dose of humility as a lawyer, quite frankly, to work with other professionals. So how does a family office work, Kat? I'll turn it over to you.
Okay.
And if you can kind of walk us through how a family office works.
Right. And so basically with the family office engagement, like Jim was saying, the teams don't usually work together. So, in December, we would all sit down, kind of walk you through the family office service and say, hey, with Hal and Wanda, there's an easier way to do this. Instead of you dealing with your CPA, your financial advisor, and us, how about we just have one meeting once a year to kind of go through where you're at for the year, and then coordinate with your CPA to make sure that the tax filings are done correctly, and then coordinate with your financial advisors and make sure that your investments are going well, or if there's some tax planning around that. And so the way we would start the family office cycle is we would have a meeting with Hal and Wanda in this example in December and see if they're interested in doing that family office service for the upcoming year. And if they agreed, we would kind of walk through the sign up process in January and February. We give them a flat fee. That flat fee would cover all of the service for the year in terms of helping bring the teams together, coordinating our schedules with the financial advisors and CPAs, and then putting together that annual meeting where we can go through what we've all done together. And so that would be kind of January and February, kind of looking at what we'd have a meeting with Hal and Wanda, look at what their goals are for the year. In this case, Hal's father has declining health, and they want to see where their assets stand, and they're looking to create some estate planning documents and activities. So we know that's what they're looking for the year. And so hopefully Hal and Wanda, in our case here, Jim, they would sign up for the family office cycle. They pay the flat fee, and then we would start the process of the family office. And in our case here, they sign up. We know they're on the list. We have a few families signing up, and we try to get all the families to kind of sign up by February, because we don't want to include a family in March and April, and we don't have that time to kind of get the plan together and have that annual family meeting, annual summit in the fall.
Yeah, so this is really a buildup. And so what we do is we like to ping our clients and say, hey, what's top of mind for you guys? And, January, what is January? It's New Year's resolution. It's a time for people to be like, oh man, we got to get to this. So one of these big rock issues that you'll see for Hal is he may be looking at selling the business that's losing money. Now you may ask yourself, who buys a business that's losing money? Lots of people. Okay. Lots of people buy a business that's losing money if it's got great potential. And so we spend this time gathering information from the prior year and kind of going over those really big issues. And, frankly, if I ask a client, what are your big rock issues? They know, right? They know what's going on. And then they spend 2 weeks in Tahoe. So what happens in March, Kat?
So what happens in March? So while they're doing their 2 weeks in Tahoe, they've given us permission to kind of work with their financial advisors and CPAs. So we introduce ourselves to their financial advisors, CPAs. We have a meeting. We say, hey, let's work as a team. Let's have an annual meeting in the fall. And between then and there, we'll coordinate and make sure that we're all covering their goals for the year. So in March, after having that meeting, internal meeting with the financial advisor and your CPA, we'll have a meeting with Hal and Wanda and kind of go through what we plan on doing for the year in March. And so during that meeting, we go through what the financial advisors plan on covering for the year, what the CPA plans on covering, and what the firm is going to do for Hal and Wanda. So kind of like an introduction meeting to kind of go through what we plan on doing for you.
Yeah. And I'll tell you what, I kind of wrote this story, the Hal and Wanda story in a sense, working with Kat. And I pulled this from my own family experience because my mother-in-law passed away last year from Alzheimer's, and my father-in-law is in assisted living. And, when you take over the financial affairs for your parents and you have siblings, sometimes it goes well and sometimes it doesn't. And sometimes people are really worried. And I'll tell you, that's an example of something you don't know what you don't know. And that's why it's important to meet with the CPA and the lawyer and the financial advisor, because the three of those people are going to work together to make sure that Hal doesn't step in it, right? That he administers dad's assets and healthcare and all of that properly, so that he's not worried about it. So he's not concerned about it. So, and then also, guess who's actually caring for Hal's father? It's not Hal because he's busy working. It's Wanda, right? It typically falls oftentimes on women. So, and then we talk about the sale of the business. Now, I will tell you, Kat, you and I know, if a client says, I want to sell my business in 5 years, I like to hear that much better than I sold my business 5 days ago. Okay.
Right.
Because your planning opportunities are just a lot less. Okay.
Right.
So let's go to what I would say is one of the busiest times for us,
Right.
which is this month of April. And where are Helen and Wanda?
So Hal and Wanda are in vacation in the Caribbean. They're having the time of their lives. And so, so for us in April, it's probably our busiest month for the whole annual cycle. So this is where we're collecting all of your information, all of your financial data, all of your bank account statements, all of your tax filing requirements and when the deadlines are due, and your life insurance information, your current estate plan documents, if you have any. In their case, they don't have any. Basically everything, we're trying to gather all the information to get a big picture of where you stand financially and where we can plan for the year and make it tax efficient for you, and make sure that you're filing your taxes on time and you're doing the best investments with the money you have. And so in April, part of that fee is helping your CPA. The deadline I think is April 15th for tax filing. We help coordinate with your CPA and make sure, hey, he has like 20 trusts, and to make sure everything's being reviewed, all the tax returns are being filed, or if they're not filed on time, to make sure all the tax extensions are filed on time, so you have that October 15 deadline covered.
I had heard from another advisor that one of their very wealthy clients, that the accountant that they had hired missed a filing deadline, and it was a $2 million penalty. So the penalties when you put a lot of zeros in there, the penalties can be quite big. And I'll tell you, CPAs, accountants, they understand tax compliance. They understand when things are due. They understand where to put things on forms. Here's what oftentimes is a gap in knowledge. They may see a trust, an accountant, or CPA, and they may not know, is this reported on my client's individual return? Do I have to do a separate tax return? Do I need to do a partnership return? Oftentimes they don't know. And this is really where the lawyer and the CPAs work closely together. And I'll tell you, if you have to go through the gatekeepers, if you have to go through the assistant and the voicemail and going back and forth on email and just going down some, attorneys oftentimes will start later in the day. Financial advisors often end earlier in the day, at least on the West Coast. So there is often this disconnect, and it just takes a really long time to get stuff done.
Right. And part of the benefit of having us as the family office, the CPAs are slammed. And so they have 1,000 tax returns that they're doing. If we know that your tax returns need to get done, we can assist in getting the data for them and making sure yours gets through their line of tax returns and gets done on time. Yeah.
And I would say then like end of June, beginning of July, that's what we call halftime.
Right.
And so, Kat, when we were getting ready for this, we were talking about what's the best analogy.
Right.
If you could take any moment in time in a basketball game, for example, any moment in time of a basketball game, if you only knew, okay, there's only one time I can talk to the players and I know the score, it's halftime. That's why there is a halftime. That's why you just don't go from the second to the third quarter. The buzzer buzzes and then you just hop to the next quarter. No, you go back. Why? It's because you're going to talk to your players. And so that role is essentially like a coach's role that we have. And we're here to coach the rest of the advisors so that you have an optimal outcome. And I will tell you, Kat, I see this with wealthy people with much more wealth than 50 million or 60 million. They're not doing this. And I think they're just leaving way too much money on the table. They end up paying way too much in tax. So walk us through July, August, and the family summit itself.
Right. And so like Jim said, it's halftime. So we're based off of the financial data you give us, we create a financial sheet, basically a net worth statement saying, hey, and usually our valuation cutoff is around June 15th. As of June 15th, what is your net worth? What are your assets? What are your tax liabilities? and what can we do to mitigate that tax liability before the end of year for the next tax season, et cetera. And so we have the cutoff for the financial statements June 15th, and then in July and August, we actually start putting the data together and creating the materials for the annual summit. And so during that time, we're creating, for our firm in general, we're creating a booklet of all of your, estate planning documents, all of your trust information, your assets, and then we're putting that together. We're creating a family tree, a comprehensive diagram of where all your assets stand and what we can do, whether it's creating a grad or other advanced trusts to kind of mitigate that tax liability. And then the CPAs and the financial advisors are also getting ready for the summit. They're also creating presentations for that summit to show you where they stand in terms of what they're doing to work with us to make sure that you're having a good year. Jim, did you want to?
Yeah, no, and I think this is really important because I think some people should be doing this. Really, let's just speak frankly, probably everyone should be doing this. But really, at what point does it make economic sense, right? Because there is a fees associated with the engagement, okay? So, but this is something that really you should be doing. If we're not doing it for you, you should be doing it for yourself. You need to be paying attention to this. How do you pay attention to it? Well, if you're wealthy enough, you hire the advisors because it makes economic sense. And what you'll see here is as we take Hal and Wanda through this year, Hal is going to be selling his business, okay? So what we're going to talk about, the benefits to Hal and Wanda. Okay, so we saw in the prior slide here that Hal and Wanda, they go to France in July and early August, right? They just have a great time.
Right.
They're not having to do this. We're stuck at the office doing work, right?
Right. And so we're taking that pressure off of them. And part of that preparing for the annual summit is creating so I like to, each family office, I like to create a family mission statement. Kind of what does your family represent? What is your goal for yourself and your children over time? What's your generational wealth goal? And so part of that is creating a statement with, in this case, Hal and Wanda, to include in the materials so we can talk through what their goal is for their children. And if they want to bring their grandkids, we can kind of walk through what the overall goal is, whether it's 10 or 20 years from now. I just wanted to add that in.
No, I mean, Kat, that's great. And I'll tell you what, one of the great things about working with you is I'm a generation older than you are. Many times we're working with clients, we are working with multi-generation clients. It does make sense to have your advisors be different ages, okay? First of all, because I might be working with the parents. You might be working with their kids right. over the long haul, right? And then so how does this benefit Hal and Wanda? I think first and foremost, they get to live their lives. And it doesn't matter how much money you have or you don't have, everyone wants to live essentially their best self, their best life, right? In this particular case, they're also saving $2 million in income tax. Well, that's not a bad thing. That's a good thing, right? And also making mindful contributions to charity. Now, how they save the money on income tax is part of what part of that whole structure that we talked about, which is the planning component and implementing the planning. But they also are able to make mindful contributions to charity, not just, oh my gosh, it's December 31st. We have this much. Oh, we need to write a check to a charity. But it's something where you're sitting down, maybe they sit down at Thanksgiving, right? Maybe the family sits down and talks at Thanksgiving dinner. Okay, we're going to allocate this amount of money, and at what charity should we support this year? And so that might very well be, and oftentimes is, a topic of conversation at the annual summit, is just talking about the process of how to train your children to be, I don't know, better people. I don't know if that, probably shouldn't say that, but probably better people, right? But having a team of advisors working together, because if you have significant assets, that does require care and feeding. It's just a fact. You know it, we know it. You can do it yourself, or you can contract it out to a third party. And I will tell you that we're not the only law firm that's doing this, frankly. There are a fair number of law firms that do this. You will primarily see them on the coasts, typically the East Coast, very few on the West Coast. And so if this is something where you are, and I would say too often the care and feeding that should happen doesn't happen because no one's running things. Now, when I say running things, there's nobody who's in charge and assembling and managing the team. If you're a billionaire, you probably already have it. Okay.
Great.
If you have 50 million, it's probably you. Are you the best person to run this? You might be, but you might reach this point in your life where you say, I just don't want to do it anymore. And I need to have somebody else do it. And that's what this role fulfills. So if you're interested in the family office, we do have a family office practice page on our website. You can check out our website, CunninghamLegal.com. If you're watching this on YouTube, subscribe, click the subscribe button. Okay, do that right now. Very important. And if you'd like to make an appointment, there's a request an appointment button on our YouTube page, on our website. And Google reviews. If you like our webinars or you're one of our clients and love us, please consider writing us a Google review. So if you see our little Google page come up, please write us a review. We'd really appreciate it. So we'll open it up for questions. And Kat, you know what? Thank you for joining me here today. It's so great to help families out when they come in and they say, yeah, I'm just kind of done dealing with the day-to-day hassle and staying on top of it, or it's getting beyond my capability. You know, one other thing we didn't talk about is this is quite common. We see this a lot with CPAs. If you're wealthy and you have a CPA who says, you've outgrown me, you're my biggest client, it's time to hire another CPA, you need to give that CPA a literal or figurative hug, because that is a person who is humble enough to acknowledge their own limitation. And that's someone who really is your friend. Okay. Because sometimes people's stuff just gets too complicated. And it's not that one CPA is better than another. It's just a different skill set. Okay. That's really all it is. It's a different subspecialty.
Right.
So any last questions? You can go ahead and put them in the Q&A. Any final thoughts, Kat?
No. And so at the end, September and December, we have the meetings with you, whether it's in the office or at your home with everyone together. And part of the benefit of it is, as you do this every year, most families that I worked with, they would do it every year. By your 5th or 6th year, you feel so confident in what you're doing that everything becomes efficient. You get a set of materials every year. If you need to do something or terminate a trust, you can just pull out the materials and say, hey, I did this in 2020. I'd like to do this in 2023. So it just becomes, your life becomes easier over time.
Yeah. And so Russell asks, general idea of the flat fee, is it a sliding scale depending on net worth and annual income? It is, Russell.
Right.
It just is going to vary between people, but that's like a one-on-one. Give us a call. We'll set up a time. We'll go over your situation. And then we can give you a flat fee quote at that time. Mason says, what a great idea. I will subscribe and leave a Google review. Jim and Kat, what a great webinar. Thank you, Mason. Thanks for those kind words.
Thank you,
Well,
Mason.
and we have one more question here. I'm in Texas. Can I use your office, or will it be better to hire an estate attorney here? Well, Alberto, we do not have an office in Texas, but we are one of our attorneys is licensed in Texas. My parents happen to live in Fort Worth. And so I've got that Texas connection, I suppose, but that's something where certainly we could handle anywhere across the country. And Alberto, I'm really glad you mentioned that, because Kat, this is one thing that people don't really know as much, I think.
Right. And so
where are the lawyers that do this? Are they all across the country? Are they next door? Where are they?
So they usually, most of the firms that are doing this are stationed in New York and DC. And now, we have us in California, but most of our families, they were all over the US. So whether they're in Florida, Texas, Michigan, we were handling families in other states, because to be honest, because these family offices are so complicated, you want the best lawyers. Yeah. And so they're usually sitting in DC or New York, and now, California. So that's, being in Texas is completely normal and for using our services.
Yeah. And, maybe you can do that trip, where does the family summit happen, Kat? Where can it happen?
So we try to make it a very personal experience, so we can bring your family there. So we usually have it, we can have it at your home, or we can have it in one of our offices, depending on where you feel comfortable.
Or off-site, you could say, hey, we want to have it in Tahoe, or we want to have it in, San Diego, or wherever it is. And then we travel to meet with the families. So
right.
But, you know, a lot of these are we get very deep into the family in the sense of it gets really highly personal, quite frankly.
Right.
And there's a lot of family dynamic. And what's the cost of a family office? Again, Alberto, that's something, just go ahead and set up a time to speak with myself or Kat, and then we can go ahead and let you know what the fee would be. All right, let's see, we have Q&A. How long have you been offering these services? Well, Jay, this is something we have formalized this year. And I will tell you, we've been doing it for several families already. But what we did is we figured, you know what, we're doing this anyway. We might as well just kind of tell the world. But Kat, you did this for about 5 years, didn't you?
Right. So I did it for 5 years. So I have a pretty in-depth experience on the whole cycle.
Okay.
But yeah, we've been doing it for a couple of families at Cunningham Legal. And so we just want to extend the branch out and kind of get it started with everyone else.
Yeah. All right. Well, on that happy note, thank you for joining us today. Thank you, Kat. And please remember, subscribe to our YouTube page.